The local bourse managed a weak rally, but there was little confidence and plenty of caution ahead of tomorrow's EU summit. To run through the day's action, I spoke earlier to Martin Lakos at Macquarie Private Wealth. Well, Martin Lakos, a moderate rally, and I see it's been the high-yielding stocks that have outperformed today.
Yeah, Tiki, look, a slight respite from this week's market moves, up nearly 30 points for the ASX 200. Again, volume is very light, so not a lot of conviction. People really are waiting to see what the Europeans come out with over the next 2 days at the summit, so I'm sure we've talked a lot about that over this last week. You look, the yield stocks are definitely still in favour. You know, at the end of the day, the big performers of the market, in fact, are those low beta or low leverage stocks. The high beta stocks are the underperformers. So stocks like Telstra, with a yield of 7.6%, very much in demand today. It closed up 5 cents to 3.67. That's yielding 7.6%. The financials did quite well, pretty much across the board. Energy and materials probably was near enough the laggards, with other defensives doing quite well, such as consumer staples, utilities and property trusts.
I see also doing quite well in the financial sector is AMP. Was that due to its latest foray into the self-managed superannuation sector?
Look, the stock did pick up a little bit, and I think that people see that as a positive move. They are basically opening a new business unit into self-managed super funds. The largest part of AMP's superannuation business is actually corporate super. So this is new. They're making an acquisition of the or parts of the Cavendish Administration Group, Adelaide-based group. They're buying 2 of those businesses, and they're basically very positive about the outlook for self-managed super fund strategy, with citing a growth in funds across the nation of $430 billion currently held, heading towards $2.2 trillion by 2030. So no wonder they want a piece of the action. Stock closed up 7 cents to $3.80.
All right, contrasting day for Boral stock with a profit downgrade.
Yeah, look, sadly, this is the second downgrade or guidance given by Boral in the last 2 months. The new CEO, Ross Batston, delivered the news, unfortunately. Look, back in the first half results, they were forecasting a range of $150 to $170 million for the net profit after tax. They're now down to $100 to $110 million range. Look, they cited quite a number of things, if I can quickly read them off. Delays in major resource sector and roads projects, weaker property sales, earlier than planned maintenance shutdown of their Warren Pond cement plant, weakness in residential construction, but they did note that the US and Asian businesses are running in line. Now, the stock was sold down very heavily, down 7.5% at one stage, rallied through the afternoon to close down 6 cents or 1.8%.
Martin Lakos, thank you very much for all that.
Thanks, Tiki. Always a pleasure.
And to the other major movers on the local share market. Seven West Media staged a partial recovery after yesterday's change of CEOs sparked a 14% slide. QRX Pharma had a $145 million wiped off its market value after the US watchdog demanded more information on its pain relief treatment. Alesco has written to shareholders saying its board unanimously recommends the rejection of the Dulux Group takeover. And television production company Beyond International has surged 15% after announcing a profit upgrade. Turning to currency markets, the Australian dollar is 0.5% above parity. And in commodities, in New York, oil settled at just over $79 a barrel. Gold dipped to $1,568 an ounce.